Welcome back. It is 10:12 and it is time for the Business Buzz. We've got Ryan Frazier here to break it all down this morning.
Lauren, it is so good to be with you. We have a lot of really meaty business topics to cover today. The Federal Reserve just lowered interest rates by a quarter point a couple weeks ago, but the average 30-year mortgage rate edged higher for the second week in a row, but it's still considered a low rate. Thursday, mortgage buyers, Freddie Mac reported the average rate is 6.24%. Just 2 weeks ago, that rate was 6.17%. It's the lowest level in more than a year. At the time, it was about 6.78%. 15-year fixed rate mortgages are also lower. Those are popular with homeowners refinancing their homes loans. As of Thursday, Freddie Mac reported a 15-year rate drop slightly, 0.1% to 5.49%. It's important to note that even when the Federal Reserve does cut rates, it doesn't always have an effect on home loans. Next, foreclosures have been low in recent years, but they're on the rise again. There were nearly 37,000 in the U.S. in October, according to Adam, a property data firm. That might not seem like many, but filings last month were 20% higher than a year ago. Also, it's the 8th straight month of annual increases. But Rick Sharga, the CEO of real estate market intelligence firm, C.J. Patrick Company, puts it into perspective. He says more than 4% of mortgages were in foreclosure at the peak of the recession. Right now, Sharga reports there are approximately 0.5% in foreclosure. High housing costs, inflation, and stagnant wages, it's proving to be too much for household budgets. Bank of America just did a study and found that 1 in 4 households are living paycheck to paycheck. Researchers had combed through internal data of its millions of customers and tracked spending. They found that a quarter of households spend more than 95% of their income on necessities like housing, utilities, and groceries. That, of course, means they have little to nothing left over for extras like going out to dinner or taking a vacation, let alone savings. Finally, some relief for grocery shoppers. President Trump signed an executive order Friday to lower tariffs on coffee, beef, and fruits and several other agricultural imports. Actually, there are more than 200 food items that will have lower prices. Financial experts say food prices are among the categories that have seen the biggest increases, and consumer dissatisfaction surveys have reflected that. However, it could take weeks or months to see the relief from the tariff rollbacks.
Certainly a lot that you guys are tracking. It's always, very interesting when you guys break it all down on the Business Buzz, but we're going to change it up a little bit because we have some other business newsmakers to talk about. Yeah,
there's a lot. The president, as you all probably have heard, has thrown out the idea of a 50-year mortgage. The 30-year mortgage is quite a commitment, let alone 20 more years. Well, Lauren, needless to say, there's going to be a lot for folks to really think about. Now, the aim of this idea is really to help first-time home buyers in expensive markets like Denver. The truly advantage, if you will, if you look at it, is the biggest benefit is the lower monthly payment. But there's a lot of downside here, Lauren. I mean, for instance, over 50 years, you're going to pay far more in interest over time, perhaps double that of what you would pay during a 30-year mortgage. You're also going to build equity painfully slower, perhaps half as fast as you would during a 30-year mortgage. And so you could end up paying 2 to 3 times the cost of a home. And here's a critical consumer protection point. A 50-year mortgage is considered a non-qualified mortgage. Now, under the Dodd-Frank Act, a qualified mortgage cannot exceed 30-year term. That means that these loans don't have some of the same protections. They cannot be purchased by Fannie Mae or Freddie Mac. They're considered riskier and they remain a niche product unless the federal government takes additional action. And so it's a creative tool, but arguably it's not really going to address the affordability for most folks who are just trying to figure out how to get into a home these days. And it stretches the loan instead of really fixing the price.
I think it's kind of like that shiny new toy, right? You get excited, it's something new, it's something different. People love the idea, oh, I'm paying less, this is great, but that's short term. You really got to think about long term here.
That's right. And your point is, I think, very valid, Lauren. Like at the end of the day, right? Yeah, most people really want a lower payment, but that said, you're talking about paying a heck of a lot more over time, and 50 years. Oh my goodness. That's a long time. I thought 30 years was a long time. So, for sure. So we'll see how this plays out and whether it's something that truly addresses affordability. So now let's talk about the end of the penny, Lauren. The U.S. Mint ended production of it last week after making them since 1793. The move was done to address the penny's growing irrelevance and is meant to save money. It costs nearly 4 cents to produce a 1 cent coin. It seems like this will now make more people use the nickel, but it takes nearly 14 cents to make just a 5 cent coin. So this is clearly going to be a big deal with respect to pennies, in terms of whether you're collectors and it doesn't make them more valuable. It's fascinating to me, Lauren, that, they've been making pennies since, 1793. And needless to say, they're done making them. But I think a couple of interesting points. It's important to understand that for businesses, the penny could, getting rid of the penny could be a win. Faster checkout lines, perhaps cleaner accounting, fewer coins to handle. Most countries that have retired their smallest coins, so think Canada, Australia, New Zealand, they simply round to the nearest nickel for cash transactions. Now, for consumers, I think many will be concerned about whether folks will be rounding up more or rounding down. Economists say that they think it will even out, but shoppers may feel that there's a hidden price increase. And so we'll be watching for that. But I got to say this one thing. I don't have any pennies on me, but you can still use your pennies, right? So don't throw them out. They still have value. Doesn't mean you can't use your pennies anymore. They just stopped making them.
And so I wonder if people find, a penny heads up, is that going to be like extra good luck now? Are people going to be diving for those pennies? Because now, I'll be honest, I don't even really think twice about it. I'm like, someone else can get good luck today. Right. But now I might be jumping at it.
Why not?
Wanting.
Well, perhaps I still pick up the penny if it's on head. So I don't know where that superstition comes from, but many of us do it today. But yeah, I think, they may become more collector's items in time. Perhaps not in our lifetime, but, sometime 50, 100 plus years from now, more people. But that said, it'll be interesting to see how this all plays out and what happens with the penny. But keep your pennies.
Ryan, I got a little something for you. I have to go down to my car today. There's not coffee in there. It's just a penny.
Okay.
Don't say I never did anything for you.
Well, and it's got to make sure it's heads up because we want good luck. We want good luck.
I got a lot more coming up at 11 o'clock. I'm going to keep my change for 11 o'clock, though. That's the only one I got, so it's yours.
We're going to share the penny.